Thank everyone for joining. I appreciate everyone taking time out of their day. We are going to get started here in a second. Just confirming that the audio is working. So today's presentation, we're going to go over restating a plan and the process, some of the reasons why. Specifically, we're going to be focusing on restating a plan from Vanguard. So hopefully you find this helpful. Please like this video and subscribe for more videos like this. Please ask questions in the live chat here, and I'll be answering them as we go through the slides. And if you're watching this as a recording, you can ask comments in the comments. There's also going to be links to more information in the description. So let's get started. So this, just as a roadmap of where we're going, we're going to be, again, talking about restating or really switching providers. So if you have an existing solo 401k with a different company and you want to switch it over to a self-directed solo 401k, specifically focusing on switching from a Vanguard solo 401k, starting out by going through some of the differences and really the reasons that you might want to consider switching, such as loans, such as the ability to make Mega Backdoor Roth contributions, the ability to have checkbook control, invest in alternative investments, just to name a few reasons. And then we're also going to go through some of the compliance support things to highlight, which we provide as part of our services. In addition, we're going to go through the process to restate and some additional considerations that may or may not apply to you. And then lastly, just how you can get more information if you want to find out about your specific situation and how exactly it would work. So please don't hesitate to ask questions. You can ask them here in the live chat, and we'll answer them right here just as we go through the webinar. So first off, let's start by looking at some of those differences, comparing a Vanguard solo 401k to a self-directed solo 401k. So just to first define what we're talking about. So a Vanguard solo 401k would be a 401k that you obtain through Vanguard. So you go direct to Vanguard, it's their plan. You know, they're going to be, as we're going through it, you know, it's limited to things that they allow you to invest in. Whereas going to a self-directed solo 401k, like what my solo 401k offers, you know, we are the plan provider. You can have the account, you know, at a bank or different brokerages. So it's really our plan that governs the account. So when you go and get a solo 401k at Vanguard, it's limited by how their plan is set up. So first of all, their plan doesn't allow for 401k participant loans, whereas our plan does. So a 401k participant loan would be, just a typical one would be if you take up to 50% of the balance, not to exceed $50,000. You have to pay that back either monthly or quarterly, equal payments of principal and interest, where those payments are spread out over a 5-year term. That term can be longer if you're using the proceeds of the loan to buy your primary residence. And then, of course, under the CARES Act, if you have been impacted by COVID and you take the loan before September 23rd, 2020, you can take up to 100% of the balance, not to exceed $100,000. And those 5-year loan payments don't start until 2021. So another difference between a Vanguard solo 401k and a self-directed solo 401k, like the plans that we offer, is that the Vanguard plan doesn't have checkbook control. So with our plan, like I mentioned before, you can have the account at a bank where it's going to have a checkbook. You can have it at different brokerage firms other than Vanguard that do offer brokerage accounts for our customers, where we help get the account set up and the brokerage firm will give you checkbook access, like a Fidelity, like a Schwab, just to name a couple. So that leads into alternative investments, because the ability to have checkbook control really facilitates the ability to invest in alternative investments. It could be real estate, could be a promissory note, It could be trust deeds, it could be precious metals, it could be cryptocurrencies. So it really there's a wide range of alternative investments that you can invest your solo 401k funds in under the rules. But in order to be able to invest in those types of alternative investments, the underlying plan documents that govern your account need to allow for investing in those types of investments. Vanguard's plan documents don't allow for that, whereas our plan documents do. So ETFs, equities, non-Vanguard mutual funds. So if you go to Vanguard and set up a solo 401k through their platform, a quote unquote free solo 401k, the investment options that will be available to you are not going to include ETFs or equities or non-Vanguard mutual funds. Whereas with our plan, not only can you invest in those alternative investments, you could have your account at Fidelity, or you could have it at Tasty Trades, or you could have it at Schwab, you could have it at many different, a crypto exchange, where you could invest in those investment options that the account provider offers. So that's another important difference. So let's talk about the fees. So with our plan, we offer a 100% flat fee. So it's really $425 plus $125 for the first year. So it's $550 to get set up, and then $125 a year starting 12 months later. So with Vanguard, the way that their fees work is it's based off of different factors, like how much money you have in the account, how many different mutual funds that you're investing in. So if you don't have a real high balance and you want to invest in multiple mutual funds, your fees could easily exceed $100 a year. So even though it's quote unquote free, it's really not, when you look at those mutual fund fees, and it's not flat. So you don't have that, definition, what you're really signing up for. So it could always change, etc. Tax forms. Now this is obviously very important from a compliance perspective. The tax forms that would apply to your plan are going to depend on what's going on with your account. So if you have a balance greater than $250,000, well, there's a 5,500 easy filing requirement. Vanguard is not going to prepare that form. We prepare that form for our customers. If you were to take a distribution or do a rollover from the account, a 1099-R would be required. If you want to take a loan, back to the loan, obviously Vanguard doesn't even offer loans, but we prepare the loan documents. So preparing tax forms is not something that's covered and included by Vanguard Solo 401k, whereas with our Solo 401k plan, it is. The pricing is flat. So even if you have a situation where you got multiple forms that need to be prepared, your price is not going to go up. It's still going to be that flat $125 a year. Mega Backdoor Roth. So even though Vanguard's plan allows you to make Roth contributions, you can't take advantage of the Mega Backdoor Roth structure. So Mega Backdoor Roth really refers to the ability to contribute a much higher amount to your solo 401k. So for example, it could be 57 or even above 60, 62 and a half for 2020. The way mechanically that it's done is that you are making what's called voluntary after-tax contributions, which is different than a Roth contribution. The contribution limits that apply to voluntary after-tax contributions are much higher than the contribution limits that apply to Roth contributions. But you, again, have to have a plan document that allows for voluntary after-tax contributions. You've got to have separate sub-accounts for the different types of contributions: pre-tax, Roth, voluntary after-tax. There's reporting that will be required when you move it from the voluntary after-tax to the Roth, which again is where the 1099-R reporting comes into play. So with the Vanguard Solo 401k, you cannot make Mega Backdoor Roth contributions because their plan doesn't allow for voluntary after-tax contributions, whereas our plan does. Incoming rollovers. So if you wanted to roll money into the plan into a Vanguard solo 401k from an IRA, Vanguard doesn't allow. Whereas our plan does allow for such rollovers. And on top of that, we will prepare the transfer forms as part of our services, because that is a very important step, because the provider of that IRA or say former employer plan has a reporting obligation when you move the money from that pre-existing account to your solo 401k. So it's going to be important that they understand that you're processing the transfer as a direct rollover, so that they can tell the IRS that this is a non-taxable direct rollover when they issue their 1099-R, that they put the right code on the 1099-R. So we would, as part of our service, prepare the transfer forms so that the pre-existing account provider understands what you're doing, reports the transfer correctly. Outgoing ACH transfers. So you're not able to send money out of a Vanguard solo 401k as an ACH. So of course, with our solo 401k plan, you could have the account at a bank, right, where you could do an outgoing ACH. And that is a sort of a technical thing, but it can be important when it comes to alternative investing. So sometimes we have clients that want to invest in syndicated transactions, and the syndicated investment transaction provider will only accept investments from their investors that are submitted via ACH. So that's another important difference between the Vanguard solo 401k and a self-directed solo 401k like the plan that we offer. So please let me know if you have any questions over any of this slide. We'll keep going through it though. You can ask questions in the chat, and I appreciate everyone's participation. So now let's switch over and talk about the process. So when you're moving the plan to the new plan provider, that the term is called a restatement. And so the plan itself is not being terminated. Really, the plan is continuing, but the plan documents are being changed. So it's almost like a cut and paste. We're cutting out the Vanguard plan documents and replacing them with our IRS approved documents. So the plan continues, but as part of that restatement process, the restated plan documents are going to refer back to the original plan effective date, which you would find on your Vanguard adoption agreement or Vanguard solo 401k plan documents. And so the practical effect of that is that you don't have to issue a final 5500 EZ, because when you're shutting down a plan, even if the value is less than 250,000, you still have to submit a final form 5500 EZ. You still have to issue a 1099-R, like if you were to roll over that money to an IRA. Here, the plan is continuing. So no final 5500 EZ is required, no 1099-R is required. Another important step in the process is we will obtain a 401k EIN. And so that is something that the IRS, their expectation is that a separate EIN will be obtained for the plan. So that lets the IRS know that this plan is a 401k. So if there's any income that's being reported with respect to an investment that's held in the 401k to the IRS, would not expect that income would show up on your business tax return or your social security number, which would be the case if that income was being reported with respect to, say, your business tax identification number. So that could be important, for example, in the context of a syndicated investment, because your 401k might buy a membership, or I should say invest in a membership interest in an LLC that might hold real estate. And that LLC is a partnership, which is issuing a K-1 to the 401k and using the EIN number of the 401k. So again, that helps ensure that all parties understand that this investment is a tax-deferred investment. So that's important. And that EIN number would be used also just in the account setup. Like if you were to go to, say, have a brokerage account at Fidelity, it would be opened up under the EIN number for the plan. You are going to need to close that existing Vanguard account. and open a new account. So, and if you're doing this because you want to take advantage of Mega Backdoor Roth contributions, you might be opening up multiple new accounts, sub accounts. It's all associated with your same restated plan. It's all associated with that EIN number, but you need to keep the separate type of money, pre-tax, Roth, and voluntary after-tax, in separate sub accounts. If you have multiple participants, so with a solo 401k, even though it's a one participant plan, if you have, say, two spouses that are both working in the business, they can both participate in the plan, but their money would be kept in separate accounts. So again, you might be opening up 2 or even 6 accounts, say, in that situation, if both spouses are going to be making Mega Backdoor Roth contributions. There's a Vanguard transfer form, which we complete as part of our services to transfer the funds from your Vanguard solo 401k to the new plan or the new plan account. So as part of that process, of course, we will handle that to make sure that it gets completed correctly. And then, like I stated above, there's no final form 5500 EZ, there's no 1099R, because you're not shutting down the plan, you're restating the plan. We got a question here, so I appreciate the participation and the good question. So let's field that question now. Can I also transfer my Vanguard IRA? That's a great question. So as long as that Vanguard IRA is not a Roth IRA, you can certainly transfer it to the restated solo 401k account. So that goes back to the prior slide where we talked about no incoming rollovers that were allowed in the Vanguard solo 401k. So our plan does allow for rollovers as long as it's not coming from a Roth IRA, because the Roth IRA rules don't allow you to transfer Roth IRA funds to a solo 401k. So we would handle the transfer form to transfer the money from the Vanguard IRA to the new account for the restated solo 401k. So thank you for that question. Yeah, please keep asking questions. I appreciate the participation. In the meantime, we're going to keep going through these slides. So let's look at some additional considerations. So if the value of your Vanguard solo 401k plan is above $250,000, an important question is whether or not you've been filing the Form 5500 EZ. If not, that Form 5500 EZ needs to be filed under the IRS correction program. And that does come up because, again, Vanguard doesn't handle the 5500 EZ, whereas we do handle it for those customers whose values exceed 250,000. So, you know, if you discover that as part of this process, then that would be something that would need to be corrected. Fortunately, the IRS, even though the not filing a 5500 EZ accrues daily late penalty fees, they do have a correction program to encourage people to go ahead and get their 5500 EZ filed. And the filing fee there is $500 per late return, not to exceed $1,500. Another important consideration here is whether you want to keep your investments in Vanguard mutual funds. You may like those investments. So if you want to do an in-kind transfer of your mutual fund investment in your Vanguard solo 401k, you can do that as long as the new brokerage firm that is going to provide the account for the restated plan would offer that same mutual fund. And so in that case, like, let's say it's Fidelity, some Vanguard mutual funds can be bought through a Fidelity brokerage account. So in that case, you know, we would get the new account set up at Fidelity, then prepare the transfer form to do the in-kind transfer of that mutual fund investment to your new account at Fidelity for your restated solo 401k. Another important consideration here is whether or not you have both pre-tax and Roth funds. So once the plan is restated, it's going to be important to have separate sub-accounts if you've got different types of funds. And so if you're going to be transferring both types of funds, you really are going to have two separate transfers. One for the pre-tax, so that can go into the pre-tax account. One for the Roth, so that can go into the Roth sub-account. And I see we got some more questions. I really appreciate those questions. I'm going to address those here in a moment. The last additional consideration on this slide is consider filing an extension to ensure plenty of time to make contributions. So if you have had a plan, say that you set up years ago, right? The good thing, or one of the good things about a solo 401k is that the contribution deadlines are your business tax return deadline, including any timely filed extension. So for example, let's say you're trying to make 2019 voluntary after-tax contributions, and you know it's right before the standard deadline. For example, right now, if you're a sole proprietorship, it got extended to July 15th because of the COVID crisis. So it's going to take some time. I mean, especially during these tax filing seasons. You know, if you're setting up your new brokerage account at Schwab or Fidelity, you know, it could easily take a week to set up the brokerage account. So you may want to file an extension to have time to be able to make that voluntary after-tax contribution, so you can proceed calmly and getting everything set up and transferred, et cetera, et cetera. So we've got some great questions here. I appreciate that participation. Let's go through those before we go to the next slide. So the next question was, how about my non-deductible IRA? Can that be transferred to a solo? That's another good question. So the answer is no. So a non-deductible IRA is just like a Roth IRA in terms of you cannot transfer it to a solo 401k. Next question, are there any filings other than Form 5500 each year? So great. So in terms of actual forms, it's really just a 5500 EZ if the balance exceeds 250,000, and we handle that as part of our services. But there could be other reporting that's required. So that goes back, you know, the typical example would be the 1099-R. So if you're doing a Mega Backdoor Roth, you're converting it from an after-tax to a Roth. Even though it's not a taxable event, it's a reportable event. A 1099-R is required. If you're taking a distribution, 1099-R is required. If you're rolling over to a Roth IRA, say, from that voluntary after-tax account, that's also a 1099-R event. So the 5500 EZ is the only form, but there may be other tax reporting that's required and plan updates, which I'm going to touch on here on the next slide. And some more questions. I appreciate that. So let me go through these since we've stopped here. When client wants to eventually close the plan and roll to an IRA, what are the procedures and costs? So the procedures would be, I'm assuming we're talking about a solo 401k with us. So whether it's restated from Vanguard or not, the procedures are going to be the same. So a final 5500 EZ is required, even if one has never been done before, because the final 5500 EZ needs to be done whenever the plan is shut down, and a 1099-R is required to report that rollover to an IRA. So we don't charge any additional costs as long as the account is up to speed as far as the annual fees. Then there's no additional cost to shut it down. Yes, we do. I see there's a quick follow-up question from the same person. Yes, we do prepare that 1099-R, and then we would send it out to the client. In regards, here, another good question here. In regards to the 250,000, my wife and I have a solo 401k trust with Schwab, and we each have a solo 401k in that trust. So in FYI, we're planning on doing more of these webinars that will address Schwab restatements. So please subscribe and you'll get notifications to our future webinars. We do them every week. So my wife and I each have a solo 401k trust with Schwab, and we each have a solo 401k in that trust. Is the $250,000 limit for each account. So if it's really just one plan, but you got multiple sub accounts, husband, wife, you need to add up the value of all the assets. So the cash, the investments, the different sub accounts, to determine whether the $250,000 threshold has been met. Okay, let's move on to the next slide. In the meantime, please keep the questions coming. So, compliance support. So with our plan, we provide full compliance support as the plan provider. So one of the things we've been talking about is the Form 5500 EZ. So if your balance exceeds 250,000 as of December 31st, the Form 5500 EZ is due to the IRS by July 31st, the following July 31st. So, 7 months later. 1099R. So if you're taking a distribution, again, we've been talking about those examples, rollover, in-plan conversion, it's going to be required. So if you go pre-tax to Roth in the plan or after-tax to Roth in the plan, 1099R is required. Solo 401k IRS required plan updates. So as the plan provider, as the law changes, the plan needs to be updated. There's a major update expected in later this year or 2021. Once the IRS approves it, that's the type of update that we handle automatically for all of our plans. And so that's important to keep the plan documents in compliance so that you can maintain that qualified plan status. Contribution calculation. So we field questions every day from our customers in terms of how much I can contribute, especially with like the Mega Backdoor Roth, that can be a little bit confusing. Loan document preparation, like we talked about before, our plan allows for 401k participant loans. But in order to take a proper loan, so it's not considered to be a distribution, it has to be prepared on loan documents, and then you got to pay back the loan according to the payment schedule. So we prepare those loan documents as part of our service for no additional charge. Alternative investments, we field questions every day from existing customers in terms of how to invest in alternative investments. It might be a question with regards to a syndicated transaction, or how to buy real estate, or how to buy precious metals, et cetera, et cetera. Account setup. So with our plan, we have customers at hundreds of different banks, brokerages, other types of investment providers like crypto exchanges. So as part of our service, we handle getting that account set up. So we don't literally set it up ourselves because we don't have access to the account, but we would prepare like all the underlying documents, like with the Fidelity example, the Schwab example I gave before. They have their own set of paperwork that we pre-fill, get it all teed up for you, and just to make it easy so that the account can be set up quickly and correctly. And so that takes us to the end of the substantive slides. I see we've got some more questions. I appreciate everyone's participation. I'll just highlight that, contact us at business@mysolo401k.net to learn more about your situation, or call us at 1-800-489-7571. Please like this video, please subscribe. You can ask questions in the comments if you're watching this as a recording. But for those that are here, we're going to keep going through these questions. So assume the advisor has to provide the information for you to complete the 5500. Is there a form that we use? So, with our process, we pre-fill out the 5500 EZ. We don't have access to the account balance, of course. So that would just be entered on the 5500 EZ, and then it gets fired off to the IRS. So like I said before, we don't have access to our customers' accounts in terms of any type of account access, no authority over it, etc. So I don't see that we have any more questions. Again, thank you so much for your participation, and let's connect. So please subscribe, and I look forward to next week with our webinar next week. Thank you so much.